Welcome. Today's quick video is on DSCR loans for Miami real estate investors. We're going to just take a quick overview of the highlights. Anyone that has questions, please call us there at the number or visit us at dscrloansource.com. First, we're going to touch briefly on the advantages of DSCR loans. What are DSCR loans and what makes them so popular here, especially in recent years? DSCR, of course, is a debt service coverage ratio loan. Very popular, again, in recent years, especially for real estate investors that are purchasing both long-term and short-term rentals like Airbnbs and so forth. The main draw with the DSCR loan for investors is that the program does not qualify you based on income. There is no income documentation in order to get qualified. That means there's no tax returns, there's no pay stubs, W-2s, there's no employment that's required. This is often the primary barrier for real estate investors when they go to get a standard conventional or a conforming bank loan for an investment property. Oftentimes, especially against self-employed investors, their tax returns may not really reflect the true income. And of course, conventional loans do have strict debt to income ratio limits that are in place. So DSCR is a way to really get around all of the income requirements. Basically, the lender is going to qualify the borrower more on their credit score and also the coverage ratio or cash flow of the property. That's the key variable in importance, is the cash flow of the property. DSCR also allows investors to close the loan in the name of their LLC or Corp. This isn't permitted with conventional loans. So that's another advantage with DSCR, is that you're not going to have to close in your personal name. There's also an unlimited number of properties for investors. Again, conventional loans often have limitations. It can be different from bank to bank, but generally it caps out to 10 properties. Hard money refinance, those are eligible with the DSCR for cash out refinance, and just to basically get out of a short-term hard money loan. That is, we often have clients use it for strictly just for refinance. And one of the big key points here is that DSCR, there is no 12-month seasoning requirement for the loan. Again, something often encountered with conventional loans is you cannot refinance, or there's a seasoning requirement to cash out any of your equity. So if you have a short-term hard money loan and you did a rehab and you want to refinance and cash out based on current value, as completed value, there is no, you can do that in 6 months or whatever. There is no seasoning requirement. First-time investors, they are eligible with the program, and again, it applies to any standard single-family. Most condominiums and multi-unit properties are eligible short-term, of course, Airbnb and so forth. Like all programs, there's some good and there's some bad. There's some restrictions with DSCR that investors should be aware of. First off, of course, the program's only for rental properties, investment properties, no primary or second homes, vacation homes. Non-warrantable condos, sometimes those can be more on a case-by-case basis depending on the down payment of the program. Most of the DSCR purchase loans will require a minimum 20% down payment, and the exact down payment will depend on different variables like the credit score, the coverage ratio. So there's different variables that determine what the maximum is, and this can change, especially now we're in a changing market. There's often adjustments to some of the credit requirements, or maybe loan to value caps or coverage ratios. There's adjustments ongoing for those. DSCR loans, they do have prepayment penalties. In most cases, The prepayment penalty would be for 5 years with an option to buy down or lower the prepayment penalty. There's also an option to reduce that. Of course, interest rates are higher. Uh, they're going to be generally 1.5 to 2% higher when compared to a conventional investor loan, uh, but still much lower than a hard money type option. So this is kind of in between. It's not, the hard money type rates that are generally in the double digits now. But again, with conventional loan rates, they will be a little bit lower. But with conventional, of course, that barrier of income documentation comes in play, and also some of the other variables with seasoning requirements, and then also not closing maybe in an LLC. Investors with DSCR, they will need to document cash reserves, bank statements to show cash reserves. Generally 2, 3, maybe up to 6 months or more, depending on, again, the variables with the credit score, loan to value, and other factors. Gifts are permitted for the down payment. That's one thing, that gifts can be they can be received from eligible sources, but however, the buyer will need to have at least 5% of their own funds to put into it in most cases. Okay, so DSCR, we're going to look at just the calculation formula. Again, the primary focus here is the cash flow of the property, and it's just a simple division here. Basically, the calculation is done by dividing the net operating income by the total debt payment or debt service. Okay, lenders typically like to see DSCRs around 1 or 1.25. That's considered good right now. We do have options that are available for negative DSCRs below 1. So basically, yes, simple division there. DSCR of 1 would mean if you have a rental property, you rent it for $2,000 a month, and your monthly debt service is also $2,000 a month. That is 1 DSCR. Okay, and again, when calculating this, it's important to remember that it only includes the mortgage payment, principal, interest, taxes, insurance, and then any HOA dues, if applicable, for the property. But some of the utility fees and management fees that come with the property each month, those are not included when you're trying to formulate your DSCR. We'll look at a couple quick other calculations. Let's say an investor is buying a property in Miami. The monthly rental income is $3,500 a month, and the total debt's $3,000. So simple calculation, they come up with a DSCR 1.16, meaning the rental property in this case generates more income than what's required to repay the loan. And again, DSCR of 1 just indicates the investor will just be able to meet the monthly obligation. Obviously, the higher the DSCR, the greater ROI for the borrower. And again, we have options though that do provide below 1 DSCR, so there can be negative options. Those will require though generally greater down payments and good credit scores for that. Credit scores generally start at about 620. For the maximum financing though, and of course the best available, lowest available rates, borrowers should have over a 740 credit score. That's a quick overview. If you're an investor and you have questions, again, please reach out to us by calling the number there or visit dscrloansource.com for more information. Thank you.